Hello, everyone. Thank you so much for joining us yet again for our Mortgage Minute with the amazing Linda May Tomko, Home Financing Advisor with Scotiabank. And who am I? Well, I'm Alex Ward, broker owner of Maxwell Devonshire Realty, your favorite broker owner. And today we are talking about what is an insured mortgage, what is porting, and are you able to do it? Linda May, the floor is yours.
Hello, everyone. I hope everyone had a great weekend. I went to Edmonton, so it was a little crazy, which is kind of weird because it's after Halloween, but it was still a lot of fun. Um, I just wanted to touch a little bit about what is an insured mortgage. Now, I know, a lot of people think they know exactly what the options are with insured mortgages, and I hear the word, CMHC thrown around a lot. So there's actually three insurers in Canada, and all three of them offer an insured product. I'll list them for you. So the one that everybody seems to know is CMHC, which is Canada Housing Mortgage Corporation. It's owned partially or mostly by the federal government. And then we have Sagen, which used to be Genworth. So we hear that a lot interchanged. And then we have Canada Guarantee. So Sagen and Canada Guarantee are they're publicly traded, so they're not a federal organization. They offer the same products. They actually offer, if you're going to purchase a second home, you would have to go through Sagen or Canada Guarantee. You can't go through CMHC. CMHC has other products that they offer on the commercial side of things as well that Sagen and Canada Guarantee don't offer, but it just basically depends on what it is that you're looking for. And then we as mortgage lenders are going to gear the we're going to send the mortgage to the appropriate insurer. When you're looking at an insured mortgage, basically, if you're putting less than 20% down in Canada, you have to have an insurance-backed product. And what that means is the insurer is actually insuring you against default. So if you default on your mortgage and don't pay it for, quite a long period of time, they will step in and take the property back, and then they move forward with selling it and doing what it is that they need to do. Obviously, that's not something that anybody wants for anybody in when they're purchasing a home. So what does that actually mean from a bank standpoint? So when we are issuing an insured mortgage, the bank looks at it with a little bit less risk because we now have insurance on that property. So if the person that is getting the mortgage defaults on it, we can now go to the insurer and request for them to move forward with the mortgagee the mortgager in finding a solution on how we're going to either A, get the property back or move forward with payments on getting it back into a good standing. With that said, you do get a little bit of a decrease on rates when you're getting an insured mortgage, just because from a bank standpoint, the risk is less. A lot of people don't understand that, and they believe, that conventional mortgages, meaning you're putting 20% down or more, you should get a better rate with that. That is not actually it's not the case out there in the environment when it comes to mortgage rates. So you do get a little bit of a discount on an insured rate when you're putting less than 20% down on a purchase. Now, something that people aren't aware of is when you're hoarding. So let's say you're purchasing a new property, but you have an existing home, and you're going to sell that home. Well, and you have an existing mortgage on that current property, you can port your insurance premium over to the new property, meaning you would pay less premiums to the insurer because your premium is 4% of purchase price when you're putting 5% down on a new home. Now, I'm not going to quote premiums because it's very specific depending on how much you are putting down and how much you have left owing on your mortgage. And those premiums, it's a number calculation that we get specifically from the insurer. But if you're selling your current home and you have an existing insured mortgage, we can look at porting that premium over to the new property, which would save you on the insurance premium, which will save you on your just your overall cost of your mortgage for the life of the mortgage, which in banking terms, we call that an amortization. So it's definitely something you want to look into. A couple of things that you need to note when you are porting your insurance premium over to a new property is you do have to stay with the same amortization. So let's say that you purchased your home 3 years ago. You would have, and you had got a 25-year amortization because the max currently on an insured product is 25 years. That's changing in December, and we'll go into detail on that about the products that are available for that 30-year amortization in future calls or future videos. But as of right now, it's 25 years. So let's say you purchased that property three years ago, your amortization on your new home would have to be 22 years. Now that does obviously change your payments or possibly increase them. And in some cases, it increases them to a point where maybe they don't, maybe the the purchaser doesn't want to have payments on a 20-year amortization. But a lot of times with that cost savings on the insurance premium, it actually doesn't change your payments too much. So it ends up being something that you definitely want to look into because it does save you on insurance premiums going forward. Now, another thing that you need to note is that you do have to stay with the current insurer. So your broker, lender, or bank will have to figure out who it was that you were originally insured with, and they have to make sure that they go to the same insurer because we can't overlap them when you're porting your premiums over. And I guess one other thing to note is there's quite a lot of renewals. There was a lot of renewals coming due in 2024. There's going to be a ton more in 2025. If you have a current insured mortgage, meaning when you purchase your property, you put less than 20% down, you do qualify for the insured rates for a renewal if you're moving your mortgage over to a new lender. So you would be able to take advantage of those lower insured rates as well when you are renewing.
And that one's new.
Yes. And actually, yeah, we don't even have to qualify you anymore. So we used to have to qualify you at your rate plus 2% when you're doing the renewal. We now don't have to, which is going to change a lot of things for renewals because a lot of people were just staying with their current lenders because they didn't have to requalify when they could just sign the paper and renew. But now you can move and you don't necessarily have to qualify at that rate plus 2%. You can just whatever you qualified at initially, you're good to move
Basically
forward.
created way more competition between the mortgage lenders across the country and a lot more flexibility to you as home buyers, which is fantastic. Means also, though, that rates are going to have to always be at a premium because
Which
everyone's
is
going to be
also
paying.
good,
That means,
right?
yeah,
Yeah, it's great for, it's great for anybody purchasing, anybody renewing that, they can at least know that the lenders are going to be competing with each other in order to give you the best rate. So
yeah.
Scotia is really competitive right now. I'm sure Alex can attest to that.
Well, I will just tell you this. I can give a personal story about why Linda May Tomko is so fantastic. Linda May was able to save a deal that was going completely south from some home buyers of mine. In fact, was able to save it so that got an approval and funding within less than a week. Complete rush and exceptions granted. These people happen to be incredibly strong buyers, but still needed the mortgage. So it wouldn't work for everybody, but it does show that going with a professional who has a fantastic relationship with their credit center and underwriters and higher ups is
And
able
insurers.
and insurers is able to
Mhm.
move the needle when it's a good client and possible to do. So I would highly
Right.
recommend Linda May Tomko 1000% of the time because I know from personal experience that she is able to get it done when she says she's able to get it done by.
And we actually beat beat the broker on that one as well on rate.
You beat her
Not saying we can do that every time, but
broker on everything. So um, we won't dive too deep into it because this is being recorded and is live. But I can give, if you want, reach out to me or reach out to Linda May Tomko and ask her about how she was able to do it. And I'm sure she'd love the chance to win your business as well.
yep, I'm always here. Text
So,
me, call me, email me. That's how you get a hold of me.
with that being said, we also do have an election down in the States tomorrow, which may drive some American policy, which we will find out shortly thereafter the election, basically the next day after the election, which then will, of course, drive Canadian policy, which we will find out in early December. So stay tuned with us. We're not going to be on next Monday, November the 11th, but we will be back on November 18th. And trust me, things will have changed between now and then. So there'll be lots to talk about.
Yeah. He will have
Yeah.
a wonderful week. Happy Monday.
See you, everyone.